Whether it's at the grocery store or at the pump, we have all been hit by inflation. As we look at ways to make it in San Diego, I talked to a financial planner about how to make your dollar go further. She says now is a good time to look into mutual funds. And before we dive into this topic, some advice if you're a woman. You should really see this. It could make a big difference in your life.
We women live a really long time statistically, and your money is being eaten away every day by inflation. We certainly know the effects of that right now every time we go to the grocery store.
Nationally recognized financial expert Janita Wall, who's based in San Diego, has spent decades educating women about money and how to become financially independent. Wall recommends mutual funds. Mutual funds have professional fund managers buy the stocks for you. Investors don't directly own the stock and the companies the fund purchases, but they do share equally in the profits or losses of the fund's total holdings. Hence the mutual in mutual funds.
You don't have to be wealthy to start investing, and you don't have to know a lot. You can buy mutual funds, you can pick them, just look for the ratings, just like you would for a movie, and get started.
In this economy, Wall says we need to have a balanced portfolio of savings and stocks and bonds. She suggests using one of the lower cost funds, such as Vanguard, Fidelity, or Schwab.
So that you've got money that's invested for long term, is invested more in the stock market. Money that you're going to need in the next couple of years, you keep safer because you don't want to have to pull it out of the stock market at a bad time.
Wall says the amount you put into stocks versus bonds will change the closer you are to retirement. A bond is a loan to a company or government that pays investors a fixed rate of return over a specific time frame. If the stock market plummets, bonds can help cushion the blow. And the key is a balanced fund, and the manager of the fund is doing the rebalancing.
Mutual funds are amazing. They will take very small amounts, some as little as $25, but certainly most mutual funds take as little as $100 to open an account, and then you can be adding to that. So if you add bit by bit over time, that's really the most important way to grow your money.
The takeaway here is adding to it.
People who say, well, I've got $100, I'll really invest it and be aggressive with it and never add anything to it. Over time, they may end up with $200, even $300, but that's not going to get you very far. It's the adding to it month after month, year after year over time that really creates wealth.
Wall says if you save and invest $5 a day beginning when you're 22 years old, you'll be a millionaire by 65. Always check and make sure your investment advisor who is managing the mutual fund is registered with the SEC. And we have put a link to Wall's website, Plan for Wealth, in this story on 10news.com. As we continue to explore what it takes to make it in San Diego, we want to hear from you. You can send us your stories by emailing tips@10news.com or reach out to us on Facebook at ABC 10 News.